So, good evening, everyone. A warm welcome to each one of you for today around time limit to issue new tax under GST. So, today's session will be led by a highly respected professional in the field, CA Subramanian. CA Subramanian. Welcome, sir.
Thank you.
1989 has extensive direct taxation and specialized in indirect taxation since the introduction exclusively on GST. So, we encourage you to stay engaged, ask questions through the Q&A, and make the most of this interactive session. If you have any questions, you can click on raise button so I can allow you to talk. So, without any further delay, let's dive in. Over to you, sir.
Thank you. I thank Tascan for giving me this opportunity. This is my first session on this TaxCon. The topic chosen is time limit under Section 73 as against Section 74. Why this topic was chosen was very important because what happens 30th September 2025 happens to be the last date for issuing show cause notice under both the sections. Under 73, it is last date for the year 21-22, whereas 74, it is last date for the year 2021 itself. That way, now for the 1920 itself, that way there is a huge difference between these two sections. And the authorities will always tend to take advantage of Section 74. So it is very, very important to thoroughly understand what exactly is 73, what exactly is 74, when 73 is applicable, when 74 is applicable. Because at any point of time, either 73 or 74, any one is only applicable. That is also up to 31st March 2024 only. Because from 1st April 2024 onwards, they have deleted both the sections and the new section 74A will be applicable. Before proceeding to the formal presentation, let us have a quick review of this 56th GST Council because the Council has taken so many decisions which are going to be implemented with effect from 22nd September 2025, which will have huge impact on entire GST. That is why they call it as GST 2. The most important and welcome change is the operationalization of the goods and service tax appellate tribunal, and the government has informed that filing will be permitted from September 2025 itself. It is going to significantly reduce the litigation because the number of writs reaching the high courts shall come down drastically. Earlier, whenever any taxpayer is very adversely affected by an order, as the tribunal was not in place, he was forced to knock the doors of the judicial high courts. Now, today, that is not the case. GST appellate tribunal is in place, so it is a welcome change which is going to significantly reduce the litigation on GST front. And we quickly go through some of the major proposals which everyone should understand. Just 1 minute. Is my screen visible to all?
Yes, sir. For me, it's visible.
Yeah, good. How can I view the screen? The most important change is the rationalization of the GST rates. What the government has done, they have abolished two rates and made the system within three rates. Rate 5 is called the merit rate, 18% is called the standard rate, and 40% they call it as a special demerit rate. That way, since two rates have gone, it will significantly reduce the litigation on classification issues. One more most important change which is applicable to everybody is the rate reduction from 28% to 18% on cement. It is very, very significant because from day one, that is from 1st July 2017 up to 21st September 2025, the rate is 28%. Why a higher rate of 28% was fixed for a good which is being used by many people? Even a small person may require one bag of cement for repairing his house. Large constructors who are constructing malls, multi-story building, they also require cement in large quantity. The worst part on cement is that under 17.5 C and D, there is no possibility to avail the credit on all the construction materials. Everything will go as cost only, and that too at 28%. Now the rate has reduced significantly by 10%. It is a major relief for everybody who is using cement. The second major change is abolition of insurance on health and life insurance. Originally, the industry was asking for reduction in rate from 18% to at least 5%, that too for senior citizens and all, because insurance policies on health was very expensive. To our surprise, government has given a gift on account of Navratri by completely abolishing the GST on insurance on health as well as life. That is one major change which is to be appreciated. Agricultural equipments like motor pumps, tractors, and all also, the rates have been significantly reduced. For environment, it is very, very important that we should depend on renewable energy such as solar, wind, etc. The GST rate on these equipments were originally 5%, which were subsequently increased to 12%. Now, with effect from 22nd September 2025, government proposes to adopt the rate of 5%, which is also going to significantly reduce the cost of the energy projects. Prices of AC, TV, and all also going to come down because of the rate reduction. One major benefit of that rate reduction is on transport sector. What exactly happens? Even on tire, earlier the rate was 28%, irrespective of whether the size of the tire. Now it is 18%, which is a welcome move. And on many things like whether it is a car, whether it is a bus, whether it is a lorry, or any vehicle which is used for transport, the old rate of 28% has come down to 18%, which is a significant reduction. The overall cost for the transport operators comes down. Stay at hotels up to 7,500 per day, the present rate is 12%, which is being reduced to 5% with effect from 22nd September 2025. That is also a welcome move. Textile, there are two categories. The above 2,500, the rate goes up, but for articles which are costing less than 2,500, the rate is coming down. Food, for certain items like chapati, parandan, have abolished the GST. For others also rate is only 5% or 18% like that. They were reduced for many items. Now I think we can go to the main topic, which is timelines. For all the sections, whether it is 73 or 74 or 74A, the date from which the deadline of 3 years or 5 years or whatever it may be to be counted is the due date for filing of the annual return of the respective year. Under 73, we are getting a time limit of 3 years from the due date for filing the annual return. Under 74, it is 5 years from the due date for filing the annual return. Then why the ending date is not common, not uniform for everybody? It is because of certain reasons. CGST Act introduced one new section called 168A on account of COVID to extend the time limit when they feel that there is a need for that. Now, not only that, from March 2020 up to February 2022, there was impact on COVID, extending the entire country in a big way, like wave 1, wave 2 and all. So Supreme Court initially given certain extension for all formalities under GST Act, which got even extended up to February 2022. Because of this also, the time limit is going up. During the course of presentation, we can see one small table which gives time limit for 73 as well as 74 separately for all purposes like issuing a show cause notice as well as for passing the final order, etc. Even if it is repetition, no problem. We should understand that only one section can be applied at one point of time. So during the financial years ending up to starting from 1st July 2017 up to 31st March 2024, in most of the cases only 73 is applicable. 74 is applicable only in cases where the department has got reasons to believe that the taxpayer has made an attempt to evade the tax or he is having some fraudulent intentions like that. The beauty of the section 74A is they have removed the distinction and only there is a change in the penalty for both the cases. Other than that, limitation is made uniform for all cases, whether it is bona fide cases or mala fide cases. Like that, they have made a significant amendment which is applicable from 1st April 2024 onwards. Is it clear for everybody? Can I go ahead? The department, in its eager to cover more period to increase the revenue, normally invoke section 74 even in situations where the same is not applicable. Small assessees don't have a choice. For small amount of 1 lakh, 2 lakh rupees and all, they cannot afford to fight up to high court, judicial high court, and they end up paying the taxes. Fortunately, appellate tribunal is being established, and any person who has received an order in appeal which is against him, it is an adverse order, and he has he's aggrieved. Now there is a golden opportunity for him to move the tribunal. See, this is an important development which we never expected, because as per the existing provisions, normally what happens, initially show cause notice is issued either under section 73 or under 74, and based on our reply one adjudication order is passed, that we call it order in original. And if we accept it and pay the taxes, issue is closed. And if you are aggrieved, we go to the first appellate authority for appeal. In case you get a favorable decision at the first appellate authority, that is fine, but it happens very rarely. Suppose you get again adverse order at the first appellate also, there are two situations. You may decide to go on appeal to the tribunal, or you may decide to close the case. Now, for the period starting from 1st July 2017 till today, in respect of all the orders in appeal which was received by the taxpayer, the dealing tax professional can take a stand whether we are accepting that order or not. Wherever you have initially decided to move on appeal, you might have paid a further pre-deposit of 10%, which is over and above the first 10%. So total 20%, and informed the judicial officer accordingly that as and when the GST 80 is established, we will be filing the appeal. The original time limit as per law was only 90 days from the date of notification, and we were eagerly awaiting for the notification so that we may start filing the appeals. In normal cases, as and when any order is passed by the first appellate authority, the period of 90 days is very reasonable. You have time. Actually, the process of filing appeal is very simple. For appellate tribunal, it is not so as complex as filing a writ in the High Court. What you have to do, there is an application form that you have to fill accurately. You have to attach basic documents such as show cause notice, order in original, order in appeal, etc. as a supporting documents, and prepare the grounds of appeal as well as statement of facts appropriately. With that, you will, and by paying the application fees, which is also very nominal, you are in a position to file the appeal with the tribunal. Now, what happens? The government has given a gift to all the taxpayers who are aggrieved by orders passed in the first appellate authority. Even at the time you have decided not to fight for more and paid 100% of the taxes. Now, for all the orders in appeal passed by the first appellate authority, the government is giving time up to 30th June 2026. You see, now we are in September only. We have got 3 more months in 25. We have got 6 more months in 26. In all, 9 full months we have at our disposal. So, what we can do at this point of time, most probably by end of September, the tribunal's website will work and you will be in a position to file the appeal online, because for goods and service tax appellate tribunal, the appeal has to be filed only online, except certain unavoidable circumstances. In most of the cases, the appeal has to be filed only online. So the moment it is operationalized, what we can do as a first step, wherever we have already decided to go on appeal, we can start filing the appeal papers. And what we have to do for all the clients, for all the order in original passed by the first appellate authority, we have to take stock and find out, is the demand is very significant? Was it an ex parte order? Was the representation given at the time of reply to show cause notice or at the time of filing appeal was whether correctly considered, or it was rejected and order was passed against the assessee? All those things you can take stock. And in case you feel that there are merits in that case, it is absolutely possible for you to file the appeal in the GST appellate tribunal, because for filing appeal in the goods and service tax appellate tribunal, there are only two requirements. that order should have been passed under section 107 by the first appellate authority. First thing. Second thing, for orders passed before the tribunal was established, that is for the period starting from 1st July 2017 till today, you have got huge time up to 30th September, up to 30th June 2026 for filing the appeal. So this is a very latest development. Even though it is not connected with 7374, it is a very big message for all the tax professionals who are dealing GST. You can consider filing appeal with the tribunal wherever it is thought necessary. Let us move forward on our current topic. So the department was the biggest beneficiary of the tribunal not being in place. The government had a lot of difficulties. Originally, it was proposed that one judicial member and one technical member from state and one technical member from center will be in the tribunal. That view was not accepted by certain people, and they went on appeal to the to high courts and SLP to the Supreme Court and all. And ultimately, Supreme Court has also felt that the judicial members and technical members should be equal in size, or judicial members should be more. That was the verdict given by the Supreme Court. And there were several challenges for the government also to identify and establish courts in all the states. All those work is over. They have identified the places where the appellate tribunal is being established and all. Recently, some orders also have come posting the some judicial members, some technical members and all. So government is acting on full swing to ensure that tribunal is in place. So definitely it is a good sign for the taxpayers. Finally, they have decided that there will be one principal bench at Delhi. We will have the president who is a judicial member and one more judicial member and two members, one from state, one from center on technical side. For all other benches also, there will be two members on judicial, one member state technical, one member center technical. That way, the requirement of the verdict is also fulfilled. Now, let us quickly recapitulate section 73. Section 73 is the provision under which the proper officer can issue the show cause notice whenever he feels that some taxes are short paid or ineligible credit is availed or some refund of the ITC was wrongly allowed. In all those cases, wherever it is a genuine case. Actually, the taxpayer did not have any intention to evade any tax, and all the transactions are in the knowledge of the department because we are filing GSTR1, we are filing GSTR3, 2 is also auto populated. That information also available. So even though the GST is a self-assessment, by filing the return, we declare everything, all our purchase details, all our sales details, whatever is the rate applicable, whatever is the tax payable, how much is in credit ledger that we are making advantage by debiting, and wherever shortage we make payment to the electronic cash ledger and make the payment. So all the informations are available with the department. So what happens for each and every year starting from 1718 onwards, there is a deadline date for filing the respective annual return. The meter starts from that date. From there, 3 years are for the passing of the final order, and the show cause notice should be issued minimum 3 months before the date set for passing of the order. That is the crux of section 73. If you go by that, based on the dates already defined for the respective annual return filing, the financial year 1718, 1890, 1920, all the 3 years, even if you come and notice that there was some short payment of tax, there was some omissions, there was some wrong availment of credit and all, nothing can be done. The one and only exception is in case you have collected the GST from your customers and not paid the government, then there is no time limit, because when you collect any tax from the customers, it is not your money. Whatever money you are collecting towards sales consideration, that is your money. But if it is GST plus CGST plus SGST, or for other states IGST, whatever that tax being collected, it is government's money, and the taxpayer is only a representative. He is collecting the money on behalf of the government, and by 20th of the succeeding month, he is supposed to make payment to the government. Suppose it is deducted at a later date that tax was duly collected from the customer and it was not paid to the government, then this time limit will not apply. Except that particular situation, in all other cases, for all the transactions which is completed up to 31st March 2020 under section 73, government has no powers to recover the dues from the taxpayer. So you can simply forget those cases, and up to financial 2019-20, you are very safe under section 73. Now, as on date, we are on 12th September 2025. 30th September 2025 happens to be the last date for issuing show cause notice for the financial year 2021. So, the Director General of Central Excise, the Goods and Service Tax Intelligence, as well as the local audit commissionerate and the state audit commissionerate, everybody is very busy in audits and investigations, because after 1st October 2025, under normal circumstances, under section 73, they cannot cover 2021. To keep the revenue target met, they are working very hard on holidays also to ensure that show cause notice is issued with huge demands. So for the last years, it is already over in November 24 itself. Now 21, 2020, 22 only, it is 25. Anyway, after 25 also, they will be following the audit, because for 22, 23, they can issue show cause notice up to September 26. Now they have got a huge time limit. So far as 22, 23 is concerned. It is very important to understand what are all there are some 11 subsections under 73. What these sections say, that we thoroughly understand, so as to take the advantage of the legal provisions. This is very, very important to understand. I think participants will be given the copy of the presentation. You can simply copy it, or if it is possible, while viewing itself, to take a photo from the camera, you can make an attempt also. We have already covered, this is under section 73, and for show cause notice up to 2021, everything is over. They cannot do. By February itself, that last date for passing order is also over. Now, under section 73, they can cover only 21, 22, 22, 23, 23, 24. 24, 25 also will not come under 73. That will go to 74A only. So, for these 3 years, we should keep the deadlines. After that, government also has no power to raise a demand on these years. So these all the dates are important for the next 3 years, starting for the 3 years, that is 21, 22, 22, 23, as well as 23, 24. 21, 22, you have got only next approximately some 18 days. So you are very safe. After that, show cause notice cannot be issued. But wherever show cause notice is, order can be passed up to December 25. These dates are also crucial. They always state that there appears to be like that. They start the statement and they say that only because of audit it has come to our notice. Had we not come for audit, we would not have come to this like that and all. They write to justify that there was an intention to fraud. That let them write like that. There is no problem, but we have to see whether we have suppressed any facts from the department. If there was no suppression, then Section 74 has no application. Here also, by June 2025 itself, the deadline for issuing Chokas notice and for the years up to 1819 has gone. So 1718 and 1819, you are very safe. Now, many clients are getting audit notices stating that they wish to cover the period from 1819 up to 22-23, like that they issue the notice so that they cover 5 financial years at one go. In case you receive any such notice which is dated after 1st July 2025, you can straight away tell them that we are not obliged to furnish the data for 2018-19 because the deadline for issuing the showcase notice is already over. Kindly allow us to furnish the data from 1920 onwards. Like that, you can tell the audit officers. That is one way of doing it. There is another way. You have asked, I am giving. Like that, you can give the information also. There is absolutely nothing wrong. Even if you give whatever information sought by the audit commissioner for the financial 18-19, now the department will not be able to do anything with the data. So they will start issuing the showcase notice only from financial year 1920. But when they come for audit, they will not cover only 1920. They will try to cover 1920 to 22-23 so that at one go they are able to cover few more years. They need not visit your premises for that year again. That way they will be acting. We have to give full cooperation to the audit department because any document or any information which is available with us and the department would like to know, we are duty bound to show it to them. Let them take their call, and if there is a demand, let us see what are the merits in the demand. Accordingly, we can proceed. Participants, is it okay so far? Already we have covered half an hour. Are you able to get some inputs? Okay, let me continue. See, the deadlines given for issue of show cause notice as well as for passing the order, adjudication order, are mandatory. It means there is no leniency. If the date set for issuing show cause notice is 30th September 2025, any notice issued on 1st October 2025 pertaining to the particular year is invalid and it is not legally tenable. This is a stand taken by the High Court, and there are orders on that. And when you sign digitally the SENR order, so they have to compulsorily adhere to the deadlines because it is not possible to date it backwards on a later date and all. You can't sign a order on 5th October by dating it as 30th September because it is electronically signed using digital signature. So that is also one advantage. The most important distinction between 73 and 74 is there should be suppression of facts or fraud or misrepresentation, and the department should be in a position to allege that on you, and they should have some material evidence, and they have to give the statement how we have evaded the tax, how we were inclined not to pay the tax and all. Simply making allegation is not sufficient. That is what the courts are taking. I kindly request all the participants to go to the website cbic.gov.in. There you go to GST. There will be several columns like notifications, circulars, instructions, etc., etc. You go to instructions and you choose the year 2023. there is one instruction which was given on 13th December 2023 by the CBIC. The topic is on section 74, how they can issue a show cause notice under section 74. What exactly has happened? Since GST is in place since July 2017 onwards, and initially there were so many problems. First, the law was new for all the offices. Secondly, COVID also was a hindrance for them to make the assessment in time, to pass the orders in time. Because of so many things, the department issued 90% of the show cause notices under 74 only, putting the taxpayer under great trouble. And wherever the amount is highly significant and wherever the tax professionals were in a position to fight the case, even when it was rejected in the first appellate authority, they have decided to move on to the High Court by way of writ. And the High Courts have took a stand that yes, unless otherwise you are in a position to identify that the taxpayer was having fraudulent intent or an intention to evade the tax, you cannot invoke 74. You should use only 73. It means 73 means they have powers to issue the notice only up to maximum period of 3 years. Whereas 74, 5 years means you have 2 more years. To take advantage of the 2 more years, irrespective of whether 74 is applicable or not, CBI officials were issuing notices under section 74. It was giving great trouble to the high courts, and Supreme Court also endorsed the same view that section 74 should be applied only in applicable case, not uniformly in every. So the department was compelled to issue an instruction, and I have copied the instruction as it is from the instruction itself. Now, what you can do, you can take a copy of this instruction for your reference and keep it with you so that you are in a position to show it whenever a person is invoking section 74 and it is wrongly invoked. Let me read it for more clarity. So, this is a observation of Supreme Court based on which the instructions was given by the CBIC itself, which says, from the perusal of the evidence of section 74(1) of the CGST Act, it is evident that 74(1) can be invoked only in cases where there is fraud or willful misstatement or suppression of facts to evade tax on part of the said taxpayer. Section 74(1) cannot be invoked merely on account of non-payment of GST without specific element of fraud or willful misstatement or suppression of facts to evade tax. See what exactly has happening. Any businessman, while raising the invoice, he simply credits his sales and debits the customer. Many customers make the payment in time, giving the cushion for the taxpayer to make the applicable taxes by 20th of the succeeding month. But in many cases, due to cash crunch and all, the taxpayer may not be able to file the GSTR 3 because unless otherwise you make the payment of taxes, you are not allowed to file the GSTR 3. In those cases, it will not be treated as evade of tax because you are admitting whatever is the liability. You GSTR only disclosed that this much sales have taken place. So the department is well aware that this much tax is due from the taxpayer. In those cases, it cannot be treated as attempt to evade tax just because he has not paid the tax. So CBIC itself has concluded that therefore only in the cases where the investigation indicates that there is material evidence or fraud or willful misstatement or suppression of fact to evade tax on the part of the taxpayer, provisions section 74 of GST may be invoked for issuance of show cause notice, and such evidence should also be made part of the show cause notice. See, the most important lines of this entire paragraph is that such evidence should also be made part of the show cause notice itself. So, many of the GST officials may not be even aware of this instruction. That is why I insist that tax professionals should always keep a copy of this instruction with them. And whenever section 74 is wrongly invoked or wrongly applied, you can always argue that whatever show cause notice you have issued, it is against the instructions given by your own top people. CBIC instruction means it is coming, maybe signed by a commissioner level, but it is coming with the approval of the chairman CBIC only. So it is binding on the all the adjudication officers. So you can take advantage of the position. Section 74 is applicable, both 74 is applicable from 1 4 2024 because both 73 as well as 74 have limited life only up to 31st March 2024. From my point of view, it is a good initiative because there are no distinctions as to bona fide cases and mala fide cases, bona fide for 73, mala fide for 74 and all. Those distinctions are no more applicable from 1st April 2024 onwards. Time limit is also uniform, irrespective of because there is only one section, so there could be only one deadline under that. There is a deadline for issuing show cause notice. There is another deadline for passing the final order. So that deadlines are uniform. But the only difference is in penalty. In cases where there are malfeasance, the penalty will be more as compared to the thing. Let us not focus much on 74A because that is applicable only in future. Right now, let us analyze in depth 73 as well as 74. The most important thing is whenever any show cause notice is received under section 74 and after attending this session, you are very confident that 74 is not applicable, only 73 is applicable. During the course of presentation, I have referred certain case laws also, where the judicial high courts have also taken the stand that 74 cannot be applied. You will be able to defend the cases in a professional way. Shall I move forward? As per section 73(2), the deadline is 3 months before the date set for passing the final order, and the date passing the order in original is 3 years from the date for filing the respective annual return, and the deadline has to be mandatorily followed by the department because the concept of continuation delay is only for filing the appeals. Whenever you want to file a reply to the show cause notice, you can seek adjournment from the adjudicating officer, proper officer. Whenever you are filing an appeal with the first appellate authority, then also you can seek continuation of delay up to original time is 3 months, and you can ask continuation up to 1 month. Similarly, against order in appeal also, if you wish to file an appeal in the appellate tribunal, you have got 3 months time and you can seek 1 month continuation of delay. Now, luckily, for the period up to today, there is no need for seeking continuation because you have got a huge time limit up to 30th June 2026 to file the appeal with the tribunal. So, the concept of continuation of delay, continuation petition are applicable only for the taxpayer to file an appeal. It is not applicable for the department to pass the orders. So, orders has to be passed within the deadline. Show cause notice has to be issued within the deadline, and if the deadline is missed, then that order becomes invalid. It cannot be legally enforced. So we should know this so that the department also knows, so they will not pass such orders. By any chance, even if they pass such order, you should be knowing that it is not legally tenable. Now, the major distinction between 73 and 74 is that as against 3 months before the end of 3 years, it is 6 months before the end of 5 years. And as against 3 years, it is 5 years here. These notices will be coming up to March 24. Whether notice is coming either under section 73 or under 74, they can be issued up to March 24. Only from 1/4/2024 onwards, 74A will be applicable as against 73 or 74. It's clear now? So this is already covered. whatever I have told so far, is it okay? Shall I proceed? So it is very, very important to understand 73 in detail, 74 in detail, then you will be able to distinguish in a better way. So even the caption says for reasons other than fraud. So only if there is fraud, they can touch 74. Otherwise, in normal cases, they have to issue the notice under 73 only. It means it is a lesser time period. Then, statement containing details. It is in the provision, it is mentioned may issue. It is not the case. It is obligatory on the department to clearly give statements and facts to the taxpayer based on which the demand is being raised. Because ultimately, if the officer simply state that this much is due, you make the payment, how you will know whether it is actually payable or not? Whenever any show cause notice is issued, we have to go through and see what are all the demands raised, under which sections, whether the demand raised by the proper officer is in order and is it payable, or it is disputed on it is not payable. And the moment you come across the audit observations, and even before the show cause notice is being issued, you can always find the merits of the case, and you find that there are some omissions in payment of tax, you can always make the payment of the applicable GST or whatever credit which was established as ineligible but still you availed. You can reverse that credit and make applicable interest up to date, so that if taxes and interest are paid, there is absolutely no penalty under the section 73. Penalty is fully avoidable at 3 stages. First stage is you make payment even before show cause notice is issued, then there is no need for issuing the show cause notice itself. Or audit has given observation, you have given the reply, but despite that they don't consider the reply and they give the show cause notice. Then also within 30 days, whatever is taxes payable, which is not disputed, you can make the payment along with applicable interest, so that penalty also comes down, and whatever tax already paid and interest already paid, to that extent the demand in the order will also come down. And even if the department is accepting whatever you are paying, there is no need to pass the order. If within 30 days of show cause notice everything is paid, but if something is omitted, then the department will still issue the order, but in that order, whatever taxes you have already paid on that, there will be not any penalty. Only on the disputed tax, penalty will be there. That is also restricted to maximum of either 10,000 or 10% of the tax, whichever is higher. Only in case if it is not paid within 30 days. If the taxes are paid within 30 days of issuance of show notice, then it is possible to avoid the penalty in total under section 73. So show cause notice must be confirm with the demand of taxes, and it should give clearly specify under which section the demand is raised, how much demand is raised, etc. It has to be issued within 2 years and 9 months from the date of the, that is 33 months from the date of the end date for filing the annual return. They have to give complete details. Pre-show cause notice also a must, so that we can go through that and make the payment to avoid the issuance of show cause notice itself. Under that, you have to pay only the tax and interest, there is no penalty. Only if it is not paid, then full tax is not paid, for the difference amount they can issue the show cause notice. Up to 30 days after, you can save the penalty by paying the payment. Maximum penalty is only either 10% of tax or 10,000. It cannot exceed. Subsection 10 is giving the time limit of up to 3 years for passing the final order. Penalty is applicable only if it is not paid within 30 days from the date of show-cause notice. This I already covered, that in case you have collected the tax and not paid, then this time limit of 2 years, 3 years, 5 years, nothing will work. The government can demand the money and recover it along with the interest as well as penalty. Because if you have not collected the taxes at all from the customer, it is a minor offense. Then the department will still insist to make the payment from you. At that point, you can collect whatever someone collected as is inclusive of tax and work back and make the payment of tax. Then only tax and interest is payable. But in case tax is collected from the customer, but still it is not paid to the government, then it is a very serious offense. Everything will come, interest will come, penalty will come. And if the amount is highly significant, even you can be prosecuted. So it is a very, very serious offense. So taxes collected means it should be paid to the government by 20th of the next month. Last date is sunset clause. It says that section 73 is applicable only up to March 24, not beyond that. In each, see here what I have done, each and every subsection, I have simply copied from the law itself, just to emphasize that what is the most important message that section is giving. That important portion I have highlighted for easy understanding. So 73 is applicable only in cases other than fraud or any willful statement or suppression of acts. It means only in cases of fraud or willful statement or suppression of acts you can go for 74. You cannot go to 74 uniformly in each and every circumstances. So we have to rely on that, and we have to say that we did not have any intention to evade the tax. So 73 one emphasizes that fraud or willful statement or suppression of facts must be present for 74. So other than means if it is not there, then it can be only 73. It is not 74. That's how we should understand this. It only gives 3 months prior to the date of 3 years end from the date of the relevant date for filing the annual return. So the taxpayer must know how the demand has come. So it is all the more utmost important for the proper officer to give the details why this demand is made, what mistake we have done, under which section this demand is being raised. All the information should come in the form of information or statement. So it is a requirement as per subsection 3 of the section 73. Once it is served, then it is automatically deemed like that. The person chargeable with tax may, before service of notice, this is a very good provision. Once you come to know based on audit that there is a demand, and you go through that and you find that it is a omission from your side, it is payable, you simply make the payment as well as payment of tax as well as interest. Then absolutely there will be no show-cause notice itself. There is one beautiful way of avoiding the show-cause notice if the entire demand is payable, if the demand is undisputed. But if the demand is disputed, then you cannot avoid ACN, you cannot avoid art in original, and you may have to file art in original. If the officer is very reasonable and he understands and he is convinced based on your arguments that demand can be waived, they may waive, but normally not happening practically. So either at the time of issue, before issuance, or even after issue within 30 days, you make the payment of the applicable taxes, then to that extent penalty will not be there. That's also a very good provision. So accordingly, 73 is a very good provision as compared to 74. As against the actual demand, you make part demand, to the extent also your interest as well as penalty is reduced. Suppose there is a demand of 10 lakhs, you feel that 8 lakhs is undisputed and you make the payment of 8 lakhs along with applicable interest, then the moment tax is paid, interest is arrested. At the moment interest is paid, even demand on interest is also arrested. So you are very safe on that portion. And only on the disputed portion, the proportionate 10% will also come down. So my suggestion is, the moment you receive a SOCAS notice, and there are demands coming under various heads like A, B, C, D, E, F, G, and all. Each and every case you analyze, and wherever you find there is merit in fighting, you fight without paying the taxes. And wherever you find that it is undisputed, this tax is anyway payable, kindly make the payment of tax along with the interest even before the issuance of SOCAS notice, or the moment you receive the SOCAS notice, at least within 30 days before of the issuance of SOCAS notice. It helps you in two ways. The moment tax is paid, interest is arrested. The moment interest is paid, the demand on interest is also comes down substantially, so that you are safe, and penalty is also reduced to the extent taxes are paid. So once you identify that it is payable, then there is no point in delaying, because interest is calculated on a daily basis only. Under GST law, the concept of per month and nothing is there. From the due date of the tax till the date of actual payment of tax, interest is applicable at the rate of 18%. 18 to 100 into number of days by 365. That way you have to calculate. So that way, even one day saving may give you some relief on tax on the GST portion. This is an excellent provision. By making the payment of applicable taxes along with interest, you can avoid the penalty, or you can reduce the penalty which you have already covered. So there is a penalty which is maximum under 73, 10% of the tax demand at 10%, whichever is higher. It cannot be a more demand. Incidentally, I would like to tell you 2-3 points connected with this thing. Whenever there is any delay in filing any returns and they file a late fee, they cannot simultaneously levy another penalty also, because section 125 of the CGST Act is very, very important. It proposes for a penalty for failure to comply any of the provisions of the Act or any of the provisions of the rules. A penalty is levied. And what they do, they levy two penalties, one under CGST Act, another under SGST Act. That penalty is not applicable here. Here under section 73, the maximum penalty is whatever is proposed under 73(9), and beyond that they cannot levy another penalty. And wherever any late fee is also there, they cannot simultaneously levy another penalty. Those aspects we should be thorough, so that we don't end up paying those additional penalties unnecessarily. So from date 73, maximum 3 years that we have covered, and we are fully aware. That this section is coming to an end, and after 24 it will not be there, but there is no time limit for tax collected but not paid. This is sunset class for 23-24. I think with that we are closing section 73. See, 74, the head itself says that by reason of fraud. Out of the entire sentence, the most crucial words are by reason of fraud, or willful statement, or suppression of facts. Only in those cases 74 is applicable. It is not applicable in all other cases. So this is simply reproduction of the subsection 1 of the section 74(1). What we should understand is that highlighted in bold and red. So whatever be the situation, unless there is either fraud or willful statement or suppression of facts, it is not sufficient. If this any one of the element is sufficient, there should also be an intention to evade tax. Only if all the conditions, both the conditions simultaneously satisfied, either there should be fraud or willful statement or suppression of fact. That is one part, and there should be an intention to evade tax on the other part. And only when both the conditions are simultaneously fulfilled, then Section 74 can be applied, by which they will be in a position to add two more financial years for covering. The major difference between 73 and 74 for date for issuing chocas notice is, there it is 3 months before end of 3 years, here 6 months before end of 5 years. So in case where fraud and all that, the adjudication will be a long process. So the government has thought of it and given a longer period of 6 months as against 3 months in 73. This is applicable for 73 also. 74 also, they have to give the details on what basis they are demanding the tax. See, the basic and fundamental distinction between 73 and 74 can be categorized into two. 73 means lesser period, you cannot cover so many years, whereas 74 you can cover 2 more years. That is one broad categorization. Second categorization is, under 73, the penalty is very less and very nominal, and it is absolutely possible to avoid the payment of penalty if we correctly ascertain the undisputed tax and make payment of that. It can be reduced. But the moment showcase notice is issued under 74, penalty is inevitable. You cannot avoid. And as per section 74(5), even if you make full amount of tax and full interest under section 50 at 18%, there is a minimum penalty of 15%. So there are three categories: 15, 25, and 50. We will see one by one. So at the first stage, the moment notice is under 74, even if you make 100% of the taxes and full interest applicable, then also you will be ending up paying minimum 50% as the penalty. So wherever it is possible, you have to contest that 74 is not applicable because you are saved from that 15% penalty. Next one is, if you make payment that 100% tax, 100% applicable interest, and 15% penalty, and inform the officer that I have paid this much, then there is no need for any show cause notice at all. Next, even if you make the payment and there is a difference, he will end up issuing the show cause notice for the difference amount. This is the second stage where you end up paying 25%. Suppose, based on the audit allegation, you have not made any payment, show cause notice already issued. Now you pay the applicable tax along with the applicable interest, and you make a payment of 25% of the penalty also, because 25% penalty of the tax demand amount is also mandatory. So from the date of show cause notice, if you make payment of applicable taxes, applicable interest along with 25% of the penalty, you are saved from further proceedings. All the proceedings will come to an end and you will not be served even the adjudication order. You are very safe. But you don't make the payment of taxes before issue of securities based on audit observation, or you don't make the payment of taxes and interest even after the issue of securities notice and order is issued, then it is dangerous, because what happens after the personal hearing, and also if taxes is not paid, then he will be passing the order demanding the tax, interest as well as penalty. The moment that order comes, that penalty goes up to 50%. And he can issue orders up to 5 years, as we have already covered, from the annual return tax level, it is related within 5 years from the erroneous refund. And this is the most dangerous section. where any person served with an order issued under Section 9 pays the tax along with interest payable thereon under Section 50 and penalty equal to 50% of the tax within 30 days communication of the order. See, if one adjudication order is passed under Section 74 and you admit Section 74, you are convinced that yes, there was some intention to divert payment of tax or something, accordingly you accept, and the tax also you are not going to dispute, then the simplest way is to make the payment of full tax, full interest along with 50% of the penalty. Then there will not be any attachment of bank and other things. Suppose you get an adverse order under Section 74 from the adjudicating officer, that is order in original, and within 90 days you don't make a pre-deposit of 10% for preparing the appeal with the first appellate authority, and you don't file the appeal with the first appellate authority, and also inform the jurisdictional adjudicating authority that I have preferred this appeal. On 91st day, you have got the danger of your bank account being attached. Then you will not be in a position to run the business because you will not be able to do the banking operations at all. So, in case you get an adverse order under Section 74, it is better to make the payment of tax interest as well as penalty within 30 days and communicate this to the officer so that all further proceedings shall be closed, and all further proceedings closed means there will not be an attachment of banks. If it does not happen, then on 31st day you have to file a letter that I intend to file an appeal with the first appellate authority. Within 90 days, I will make the payment of the pre-deposit as applicable, and I will be filing the appeal. Hence, I request you that no coercive action may be taken against recovery. Like that, you have to keep the officer informed. Otherwise, keeping revenue in mind, the officers will not sit idle. They will definitely move to attach the bank, that which is very dangerous. We as a professional should take care of our clients' bank accounts and ensure that that is not happening. It is happening in several cases, and the moment it is attached and when the amount is huge, the one and only relief is the high court, judicial high court by way of writ. And almost in 95% of cases, wherever banks are attached, the department is the high court has taken the stand that for appeal only maximum 20% pre-deposit is required. Why you are attaching the entire amount? Based on this order, you immediately first defreeze the bank account. Defreeze the bank account, and whatever is excess over and 20%, that should be released to the taxpayer so that the taxpayer is in a position to run the business. See, what the tax officials don't understand, that if 10% of the taxpayers are harassed by way of cancellation of registration or freezing the bank account, that way they don't allow him to operate. To that extent, the revenue being generated for the government through them is also affected. That the officers don't realize, which is an unfortunate situation. The powers for freezing the bank account, the powers for cancellation of the registration itself, that too with retrospective effect and all, are available to the tax officers. There is no doubt, but it should be applied appropriately. It should be applied in deserving cases only, not uniformly, only to threat the taxpayer to collect the tax. But in reality, wherever the taxpayers are not fully aware of the provisions and they fail to make the appeal in 90 days or fail to make the another pre-deposit within 90 days, simply the bank accounts are attached. Interestingly, I had come across one or two cases where even without waiting 90 days, the moment adjudication order is passed and the tax was not paid in the second month, some bank accounts were attached without even information to the taxpayer. And the taxpayer come to know only from through the bank. And when he approached the High Court said that it is absurd. He has got a time of 3 months for preferring an appeal. And if we have frozen the account without waiting to see whether he is going on appeal or not, then it is a mistake on your part. You immediately debreach the account, and in case you have collected any taxes appropriated more than what is required, you refund that money immediately to taxpayer along with some 6% interest like that. Like that also, there are some good orders at the High Court. So this 7412 is underline, it's only applicable only up to 23, 24, and wherever this is, it's not applicable. So the department, if it is simply saying that you had the intention to fraud, avoid the tax and all, it's not sufficient. They should come out with strong reasons. Then only 74 is applicable. This is what the courts also say. It is not sufficient if you simply mention. It should be intention, and accordingly, some three, four. There could be more cases. I have shared four cases in my presentation so that the listeners can take advantage. These things we are covered, so there is no need for any repetition. So, in all these are all high court cases. These are all very recent decisions. In all the cases which I am referring, you can always just Google it and get it from indiakanun.com or some other paid website like TaxCan or Taxman, TaxTMA and all. If you are a paid subscriber, just by putting the name, you will be able to trace it and order. Or it is even possible to trace it by going to the respective high court and that date and party's name. So, in all the cases, the background is the department has invoked Section 74 as against 73 only to take advantage of 2 more years, even when there was not material evidence to say that the taxpayer involved in fraud or something. So the court said no, nothing doing. This order, which is passed under Section 74, is set aside and quashed, and the department is at liberty to take further proceedings in line with Section 73. It means that 2 years is gone. Whatever demand which is pertaining to the 2 years which is covered under 74 is automatically deleted, and the department will be in a position to recover only the tax pertaining to the period which is covered under Section 73, which means that 2 years is gone. That is a good relief, significant relief for the taxpayer. So this is one Madras High Court decision which you can note. That is division bench. See, normally most of the verdicts are coming only by a single judge. When it is given by two judges, it's called division bench. And Allahabad High Court has given one very good decision in Vadilal Enterprises in May 25. Identical subject 74 is not applicable. Karnataka High Court also has passed one order in July 25 on Baswaraj Sajjan. This is also interesting, which you can take advantage in case you have got a good case where you want to strongly defend that 74 is not applicable. See, your main grounds of argument should always be based on facts of the case and based on the legal grounds only. But wherever Section 74 is wrongly invoked, at the time of reply to the show cause notice, at the time of filing the first appeal, everywhere, after putting the merits, after putting the facts, before ending, you have to defend your case based on limitation also. This is all the more important because when you give a reply to the show cause notice, you should assume that you are not going to get the relief at the adjudicating officer level. You are not going to get the relief at first appellate authority level. Major and significant relief is possible only at the appellate tribunal level. By keeping that fact in mind, you have to make very strong that 74 is not applicable in your replies and submissions, so that when you go and argue before the tribunal that, sir, our case is not covered under 74, I have brought this information at several times. In the reply, I have covered. In the order in original against appeal also, I have covered. I have given relevant case laws. I have given the copy of the instructions given by the CBIC itself on 13th December 2023. Despite all those submissions, they have passed such adverse orders. Like that, if you put the argument before the tribunal, then your case getting success at the tribunal by setting aside 74 orders is very bright, very, very bright. That's why I am covering each and every point so that you can take advantage. I think TaxCon will be sharing this presentation with you. We can trace the orders and take advantage. And in serious cases, you can even enclose a copy of the case laws itself to strengthen your case. Last case is this Allahabad High Court in Bharati Mint and Allied Chemicals case dated 30th May 2025. That is also by a division bench. So once 31st March 2024, all showcase notice and all order in originals are over, and for financial starting from 2024, then 74A will come. There is no distinct time limits. It will be common for all the cases, irrespective of whether it is a bona fide case or malafide case. For malafide cases, there could be some more penalty, but otherwise, the tax, interest, and other things will be common under 74A from 1st April 2024 onwards. So the object of that tax under 73 is for other than fraud cases. Under 74, it is fraud cases. Now, under 74A, what they are saying, determined tax not paid or short paid or erroneously refunded or input tax wrongly availed or utilized for any reasons pertaining to finance years 24-25 onwards. It means while 74A is being introduced, the major difference is that there is no distinction between fraud and non-fraud cases. That is the 74. See, actually, we are already around 8:20. I think we can spend some 10 minutes in case the viewers have any queries. And 74A, it is not very significant at this point of time. Why I have chosen this point on this topic is only that so many taxpayers are getting flooded with showcase notices under Section 74, where it is not applicable. Only 73 is applicable. You listeners have clearly understood the distinction between 73 and 74. Based on that, you will be in a position to strengthen your case and put the arguments that that case is fit under 73, and accordingly, first 2 years demand is gone. It will be a very big and significant relief for your clients. So 74A, I am just skipping. Anyway, the slide will give you the data which you can use. So far as the filing any appeal, this is a very good information which we should know. What is happening? The law allows you 3 months for normal filing of the first appeal, and 1 month time is given to the first appellate authority for continuing the delay. But there are several factors beyond our control. There could be some business issues, there should be some cash crunch, there should be some health issues of the proprietor or the person dealing the finance accounts. So because of that reasons, you are not in a position to file the appeal within 90 days, but you are filing the appeal within 120 days. Even in those cases, some of the first appellate don't condone the delay. They simply say that you should have filed within 90 days. Since it is filed beyond that period, it is dismissed like that. Then the moment it is dismissed, it's very adverse position. The once order in appeal is rejected on limitation ground that it was not filed, it is very unfortunate situation, because the case may have lot of merits. Just because a procedure to file in time, you lose the case. That is not the intention of the law. The law provides for further appeal with the appellate tribunal within 3 months, and another 30 days, which is condemnable. You have to give the condemnation petition with justified reasons. Now, what happens? Thousands of cases across India, irrespective of whether state is in south or north or east or west, all the officers are uniformly passing orders, rejecting the orders in appeal on limitation ground. In those cases, the authority, the concerned affected taxpayers did not have any choice. The tax professionals have filed writ appeals in the high courts. There are differences in views. Some courts are taking a view that yes, if the law provides for 3 months plus 1 month, after 120 days, the officer does not have the power. That is not the case, because What exactly is happening? While defining the time limit under the GST law, they have given two times. One is for any order in original, an appeal can be filed within 90 days plus 30 days, 3 months plus 1 month. Similarly, any order in appeal can be filed within 3 months plus 1 month. Now, when the appeal is filed in the tribunal has got tremendous powers. They can condone the delay of even more than 1 month, provided there is sufficient cause. The crucial word is sufficient cause. Sufficient cause means it should be some, you should be prevented from filing the appeal in time. That is a sufficient cause. Under those circumstances, tribunal will come to your rescue. But there is another aspect to it. Some of the high courts have taken the view that even if the GST law provides for a period of 3 months plus 1 month, but the appeal is filed after the delay of say 5 months or say even 6 months, so long as there are justified grounds, so long as there are sufficient reasons, like you simply post the order in original in the GST portal, and it is not properly and effectively served on the taxpayer, and the taxpayer comes to know it only after a few months. For example, let us assume that during January 2025, one adjudication order has been posted in the GST portal. The taxpayer comes to know about that only in April, and by seeing that appeal order in April, within 3 months he is filing the appeal. Still, it is rejected, stating that that 3 months starts from the date of the order, which is January. You are coming in July. It is not accepted. That is not the correct stand. The correct stand is the limitation of 3 months starts from the date of proper and effective communication of the order to the taxpayer. That is April only. And there is another angle for this. There is one act called Limitation Act, which is applicable for all the laws. This law is applicable for all the laws. So when there is any delay as per the GST Act, then you have to see whether that limitation act is applicable or not. And the limitation act very clearly says this limitation act is applicable for any act wherever the limitation specified under the particular act is silent on the limitation act. It means in the GST act, if they mention specifically that notwithstanding anything contained in the limitation act, the limitation period shall be 90 days, 3 months plus 1 month, then only that limitation will be applicable. In the GST law, nowhere they have referred any reference, either exhibitly or indirectly or impliedly, nowhere there is any mention about the limitation act. It means the lawmakers had the intention to allow the limitation act to apply to GST law as well. And by proper application of mind, the legislature has correctly enacted the provisions without any reference to the limitation act in the GST law. And accordingly, even a larger delay, which is more than that 3 months plus 1 month, is condemnable by the tax officials. But unfortunately, the tax officials may not take cognizance of this view, but definitely the courts and definitely the appellate tribunal. Accordingly, your effort should be to file the appeal with the GSTAT as early as possible, and even in the worst case, before 30th June 2026 for all orders. But that notification is expected very soon, and the moment that notification is issued, according to me, for all orders in appeals being passed on and after the date of issuance of the notice, let us say it is being issued on 21st September, for all orders issued, order in appeal issued on or after 21st September 2025, you don't have the larger limit of 30th June 2026, because this limit is applicable only for pending cases. Once the notification comes, it is no more a pending case, it is a current case. Then you have to file the appeal with the appellate tribunal within the stipulated time of 3 months plus 1 month. So all the tax professionals who are dealing GST cases must engage themselves in a busy way on filing appeals with the GST Appellate Tribunal from now onwards till June 2026 to ensure that none of the cases which deserve an appeal before the Appellate Tribunal is omitted to be appealed. So, content of delay, generally the Appellate Tribunal will have a leniency, and they will only see the merits of the case. If you give some lame excuses that accountant was not well, accountant changed, we were not aware, I was not aware of the law, those kind of lame excuses is not accepted. But if there are genuine reasons, definitely Appellate Tribunal will help in condoning the delay. So, based on that Limitation Act which we have discussed, even Supreme Court is of the view that leniency is a must in genuine cases. Genuine cases means there should be very valid reasons for the delay, which is acceptable, which is justifiable. It should not be any lame excuse. I thank all the participants for the patience hearing, and I also thank TaxCan for giving me this opportunity to share my views with the participants. Now, the forum is open. If there are any questions under the this thing, or you can even open your mic and raise the question. One question is, can I get the PDF? I think TaskCan shall be sharing that PDF. Any questions? Audience can simply unmute and raise the question so that I will be in a position to answer. Okay, as there are no questions and there are only few participants, I once again record my sincere thanks to the Tascan Academy for giving me this opportunity, and I thank all the participants who had a very patient hearing. Thank you.
Thank you, sir.